In this video, I'm going to give you a rundown on my current stock portfolio holdings, and I will also show you my dividend income for the year, and then finally I will show you how I plan to become a millionaire through this portfolio. So first, let's get started. I'm 20 years old and my net account value right now is sitting at around $61,000. Total gain around $9,500. And the day's gain right now is sitting just under $2,000, just under negative $2,000 for the day. So as we go down, let's look at my largest to smallest holdings. First, we got VOO. VOO is an S&P 500 ETF, and I've just been investing most of my money that I have right now into VOO, so I can start building it up more. I kind of want it to be around 30 to 40% of my portfolio holdings right now, and right now it's sitting at 27%, so it's not too bad. But right now I have almost 35 shares. I want to get it to around 40 shares by the end of the year at least, and it's paying me a nice dividend as well. So every single quarter it pays me a dividend. I think it's my largest payment that I'm getting from my dividends so far. So my price paid, I have around 35 shares at $422 per share. Total gain right now, it's not too big, as you could see. Basically most of it is based on the tariffs and everything going on right now in the world, but I mean, right now it's a pretty good buy. The price right now is at $470 per share, when its all-time high is around almost $100 more than that, around $560 per share. So any money that I have right now coming in, it's most of it is going to go into VOO, because I want to start building my S&P 500 position in this ETF, and my total gain right now is a little under 12%. Total value of VOO right now is sitting at $16.4 thousand. So yeah, that's my largest holding right now. My second largest holding is Apple. Everyone knows Apple. I bought 51 shares at an average price of almost $140, and it's sitting at $190. It's kind of been stagnant for a while, but then obviously everything's been down lately. So I might add in a few more shares of Apple to get my position up a little more. I think my position right now in Apple, like percentage wise of my portfolio, is sitting at I think around 16% of my whole portfolio. So I don't know, I don't really want too big of a position in a single company, so I'm kind of stagnant on that one right now. On most of these, actually, right now I'm kind of stagnant for, except for VOO, obviously, because it holds all of these. I think it holds almost all of these positions that I have in my portfolio right now. But yeah, my total gain in Apple right now is $2.5 thousand, 36%, and the value is almost at $10,000. Next is Microsoft. Everyone knows Microsoft. I really want to get my positions. I only have 12 positions in my portfolio, as you can see, and right now I think I want great companies with great moats like Microsoft and Apple and Google and Tesla, and I mean Nike's been going down a lot lately. I'm down almost 50% in Nike right now. It's just been a tough year for Nike, and there's been so many things happening with that sector, and people have been kind of scared, but I really do think Nike, it has one of the greatest brands ever. I mean, you look at the Nike logo and you obviously know that it's Nike, just like you look at the Apple logo or the Microsoft logo or the Google logo. I mean, you know that it has a great moat just by the sight of the brand. But yeah, Microsoft, I have 21 shares at a price paid of $291, and I'm up around 23% right now. Lockheed Martin, they're a nice government company. I mean, I love Lockheed Martin because, you know, it's kind of government based. So like, I really think like they make all the government planes, and the government buys from them the jets, and they're a war company. So I mean, I really don't think that they're not like a Nike or an Apple or a Microsoft where they sell to everyone around the world. No, Lockheed Martin sells to the US, and I really do think that they're not going to go away, and they have government contracts with Lockheed Martin, the US, and so I really do love this company, and it pays a nice dividend as well. It pays me every quarter, I believe, and I did have quite a few shares in Lockheed Martin. I think almost 25 shares. I kind of sold a little of Lockheed Martin to buy more VOO, just because, you know, I kind of had a hefty position in Lockheed Martin for a while, and I mean, I was up a lot. I was up almost, I want to say 60% in Lockheed Martin at the time. So I sold at a good price, but I kind of wanted to keep a little of it, just because, I mean, it's in a great sector. I think it's a great company, and you know, it's paying me good. It's up 20%, even though everything's down right now. I mean, it's still up a nice 20% since I bought it, and so I mean, it's just a great company overall, and I really do like this company and what it's been doing lately. So next is Google. I have 30 shares at $104 per share, and Google, from what I've been seeing a lot of the times, and I mean, Google is quite undervalued, and I kind of want to add more to it because it's down to $146 per share, and I think I want to see its PE ratio for Google. I think it has a low PE as well. PE ratio for Google is 18.78. I mean, that's probably one of the lowest it's ever been in a long time. So, I mean, I think Google might be a great buy, and I believe their next earnings date is in 3 days from now. So we'll see what Google has to offer, and we'll go from there. So next, let's go to SPHD. SPHD is my second ETF that I have. It's the same thing. It's an S&P 500 ETF, but it's a high dividend, low volatility ETF. So it's not like SCHD, where SCHD has the 500 companies, you know, but SPHD has the lowest volatility companies in the S&P 500. So the companies that don't move much, but they have some of the highest dividends in it as well. So it pays me a monthly dividend. Monthly dividend ETF, unlike VOO. VOO is quarterly. And I have 82 shares at $42 per share. It's sitting at $46 per share. I'm only up around 8% in it, so it's not too bad, not too good. I mean, it's a nice dividend though, so maybe I might, you know, one time I might cut off the dividend from it and put that dividend to VOO maybe, because VOO has been performing better. Or I might just keep it. I might honestly just keep it for now, let it grow, maybe let it grow to $100 per share, and then we'll go from there. Next I have Broadcom. Broadcom's been my best performing positions so far in my portfolio. It's stock split, so I actually bought 2 shares at an average price of $865 per share, 866. So, and then they did a 10 to 1 stock split. So it split. I got 20 shares, 10 times 2, 20. So now I have 20 shares at an average price of $86 per share. And right now it's at $163 per share. So I'm up 88, 89%. I've been up close to 100, I want to say 140% at one point during the little bull run that we've had. So I mean, I'm pretty good with this stock right now. I mean, maybe I'll add in a few more shares of Broadcom, get more shares, get that dividend going. It doesn't really pay me that big of a dividend, but it does, so I'm not complaining. Next we have O. O was the first position I bought into when I first started in 2020. And it's just the monthly dividend paying stock. Everyone knows it, and it pays a nice dividend every single month. And right now I have 57 shares at an average price of $56. It's basically at zero right now. I'm up 2% in it, but it's gonna keep on paying me a dividend every single month, whether it's down or up. So I can't complain about that, really. I'm just getting a monthly check every single month from that for doing nothing. Tesla is my only position that doesn't pay a dividend. Nvidia pays a little dividend, but Tesla, yeah, I have 9 shares at an average price of $223 per share. It's at 224, so I'm basically at zero for that as well. And yeah, I mean, it's Tesla. I mean, I do like what Elon Musk is doing right now. I mean, I really do think that electric cars might be the future. More people are buying electric cars more than ever. So I mean, I'm just gonna keep it for now and see what it does. I might add a few shares as well. So next is Main. Main pays me a great monthly dividend. It's up 35% since I bought it. I have around almost 38 shares at an average price of $38, and it's at $51 right now. So Main has been performing very well for me. I'm just gonna keep on getting that dividend, keep on growing that dividend payment every single month. And next we have Nike. I bought Nike around last year, and when it was still at like $120 per share, and their earnings came out around a year ago during this quarter, and they didn't have too good of forecast, and their stock tanked. But like I was saying earlier, I really do think Nike has a great moat around it, and I really don't see Nike going anywhere soon. And if I do, I might cut my position from it and take my loss. But right now, I'm down 50% in Nike right now, but I really don't see the bad. I mean, I do see the bad right now, but I really don't see how Nike in the future won't keep growing as a company and keep the moat that they have right now in that certain sector that they're in. Next, we have Nvidia. Nvidia has been one of the craziest performers in the stock market in recent years. However, they've become stagnant for a while now. For the past, I want to say, almost past year, it's been. But I have 8 shares at $101 per share. It's sitting at $96 per share right now. So I'm down in it, but I really do think I want to grow my portfolio right now, because they're one of the fastest growing companies in the world right now, and I really don't see how they can't grow more, even though they've grown so much already in the past years. But this is my portfolio right now. And let's go to my dividends that I've gotten from the past year. So as you can see, the first dividend I got this year was from Nike, and it was on the January 2nd. I got almost $8. And as you can see, all these dividends, every single dividend that I've gotten, I've just reinvested that back into the company. So as you could see, I think Nike has already paid me twice, I believe. Yeah. So in January, it's paid me $7.77. I reinvested that for more shares. And right now, its next dividend has paid me $8.61 per share. So every single time I reinvest the dividend back into the company, the next dividend will most likely, almost all the time, unless they cut their dividend or something else happens, their dividend will be more than what it paid me the previous payment. So that's why dividend reinvestment is such a big wealth compounder, because if you keep reinvesting that every single time you get a dividend, that payment is just going to be much more than it was before. And it's just a crazy thing to think about, just how fast dividends and wealth can compound over time. But you could see one of my biggest dividend payments so far this year was Lockheed Martin paid me $48 from its dividend. And then you could see as well VOO, my largest position in my portfolio, paid me almost $60 this quarter. So I'm getting great payments right now. And let's go into the investment calculator and show you how I plan to become a millionaire with my portfolio. So right now, we'll put my initial investment at $1,500 because that's what I started with back in 2020. So I started investing when I was 15 years old. I'm 20 now. And so for years of growth, let's put 60 minus 15, let's put 45 years of investment growth. So when I'm 60, that's the most retirement ages around there. That's when you can pull out from your Roth IRA tax-free, 59 and a half, so 60 years old. Let's put 45 years of investment. And estimated return, let's start with 8%. 8 to 10% is around the S&P 500 per year growth over time. So let's start conservative at 8% annually. You want to do compound frequency annually. And then amount of recurring investments. So what I want to do is pull the calculator right here for amount of recurring investments. So as you can see, if we go to my portfolio right here, you can see my net account value is at $61,500. So we're going to put $61,541.23. Then we're going to subtract that by $9,515. And then we're also going to subtract that by $206.87. And we get $51,818.97. So let's just do $51,819. And then we divide that by, I started investing back in June 2020. So what we do is, how long ago was June 2020. So it's around 58 months. So what we do is we divide this by 58 and we get a monthly investment of $893. So as you can see, my monthly investment, if I keep on investing $893 every single month into my portfolio, in 45 years, when I'm 60 years old, it should be around $4.3 million worth. Whereas I've only invested $483,000. So my investment return would be $3.8 million, whereas I've only invested little less than $500,000. So once I'm done with college and once I get a better paying job, I really do believe I will start investing. I want to say around $1,100 per month, and even more. I want to start investing more than that. And if I start investing $1,100 per month, just look at how much that would grow. More. It would grow to $5.3 million by the time I'm 60 years old. So that's just the power of wealth compounding and dividends compounding, and over time, it'll grow. Your portfolio will grow if you just keep on investing and be patient with the stock market and with the markets overall, and you don't get scared when things go wrong in the world, like right now, and you buy the dips. Your portfolio will thank you later, and it'll grow over time. But that's with 8%. Let's do 10%. 10%. Look how much it will grow with that extra 2%. It will grow to over $10 million, whereas 8%, you cut it in half. And that's just the crazy thing about percentages and estimated. The rate of return is just crazy. If you can just get that extra 1 or 2%, it's just mind-boggling how much money you can make with extra percent. So that was my portfolio update. Thank you for watching, and until next time.